Hey, Atlanta, Apple is open for small business. That's right. We're here to make starting and running your business simpler. With privacy and security built in on all devices, it's easy for you to protect your customers' data. And if you need hardware or software support, you'll get advice from business experts at no cost whatsoever. So you can focus more on the soup du jour and less on, the other stuff. At Apple, we're open for your small business. Go to apple.com/small business or visit an Apple store to learn more.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, everybody. I'm Larry Kudlow. This is the Larry Kudlow Show, and you can listen to us on the Internet, live streaming on the Internet. LarryKudlowShow.com, LarryKudlowShow.com. And please, during the week, join us. Fabulous Fox Business Network. Name of the show is Kudlow. 4 to 5 p.m. every day, Monday through Friday. And if you can't get there at 4, why, please just text your favorite 9-year-old, and she will show you how to DVR the show. So, we'll talk some more about the stock market. We started to at the top of the last hour, but more from an economic viewpoint. But jobs went up, and the stock market threw a temper tantrum. The bond market threw a temper tantrum. I don't know why. Jobs are good, man. Growth is good. Profits are good. The mother's milk of stocks. But the Dow lost about 700 points yesterday on the jobs report. It was down almost 800 for the week. The S&P was down too. But corrections come and go. Let's talk to our distinguished experts, Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments. Nancy's latest book is The Women's Guide to Successful Investing. And Jim Iuorio, Director of TJM Institutional Services, Chicago's leading restaurateur, and master of side hustles. I got that from you, Iuorio. Side hustles. I've used that a lot, by the way. It's a great line. Cool. It's a great line, side hustles. I think my whole career.
Podcaster extraordinaire.
Appreciate that.
I think my whole life's a side hustle sometimes, but it's great fun. It's a great fun. So, Nancy, you saw it again. Somehow jobs are bad, growth is bad, stocks didn't like it. I interviewed on set on the Kudlow Show, TV show, and Dr. Ed Yardeni, a very smart guy. Let's see. The S&P 500 closed at 58.27 yesterday, and yes, it was down quite a bit. It was down about 2%. But, Ed Yardeni says it's going to be 6,000 by the end of the decade, the roaring 20s. And profits are very strong. Here's Trump coming down the pike and enjoying a phenomenal honeymoon. I mean, really, it's like the countries are rallying around him, and all these left-wing CEOs are coming around now back towards Trump. Lower taxes, deregulation, and so forth. So I don't really understand why everybody gets so excited about jobs and short-term interest rates and stuff like that. I mean, long rates have been going up, but long rates may be kind of right where they should be, 475. Mm-hmm. If you have a decent economy, Art Laffer made this point on the TV show earlier in the week. If you have a decent economy and capital returns go up, bond rates, 4% to 5% range kind of thing. We've seen, a lot higher, as I recall, in the 90s and in the 80s, and stocks did great. Anyway, what you think about this story?
Yeah, no, I think Dr. Laffer is 100% right. And what an honor to be on with two of my favorite people on a Saturday morning. Really, truly. I mean that. So I think a couple of things. I've been drawing this analogy to the 1990s, really hanging our hat on productivity when we had higher interest rates and higher inflation. And so I think the Fed has made so many mistakes, I can't even count them. I'm reminded of, the Ernest Hemingway quote, "I drink to make other people more interesting." And I do to make Jay Powell more interesting because I just don't know what the hell is going on in the Fed's mind. But, we had a strong economy. The labor market before these numbers, which, by the way, are notoriously volatile. And we should also keep in mind that the government survey responses have declined to historic lows. So you've got, less than 35% of those surveyed responding to the JOLTS numbers, for example. So you've got these numbers that, the hedge funds and the algorithms are hanging their hats on and trading around. And that creates the volatility that is really the friend of the long-term investor, because the economy is humming along. It's slowing some. At least it did in the fourth quarter. It's okay. It's still going to come in somewhere between 2.5% and 3% growth on a real basis. So that's pretty compelling. Earnings growth is also pretty compelling. Expected to be 13 to 15% next year. Margins are expected to expand to historic highs. All of this driven by productivity. And yet we've got this, quote, data-dependent Fed that is focused on, I don't know what, Fed funds futures. Is that their latest data? So it creates an opportunity. And if you look at I wrote about this in my 5 for 25. If you look at the average return for the hedge funds over the last decade, it's around 8% versus mid double digits for the S&P.
Yep.
So I would do the opposite, and that's what we're doing.
Yes, I love that, by the way. What the average return was, how much do you think on the S&P?
I'm going to pull it up for you because I make numbers up after I've written things, so I'll pop in with that in one
But
second.
you're right. I mean, basically, you buy the index and hang on to it. I mean,
he always says to the active manager.
Right, I do. I mean, I believe that, and I don't think I've probably made any important moves in 40 years, and it's worked out pretty well.
Shouldn't. And you shouldn't. And so, and you're not paying 2 and 20 like, the hedge fund, average hedge fund client is.
We had spent half of it when we went to Washington, but now it's been coming back in recent years. Ironically, Jim Iuorio, I think one reason stocks have done so well in recent years is because of Donald Trump's corporate tax cut, which was so bullish for profits, taking the rate from 35 to 21 and adding on that 100% depreciation write-offs. Now, that's running out, but for machine and equipment and business deductions for, LLCs, Biden spent 4 years attacking Trump's tax cuts, but it was Trump's tax cuts that helped the stock market and the economy. I mean, they just don't want to talk about it.
Yeah, there's zero question about that except from them. I don't understand why they would even deny that, because of course it's true. But one of the other things why stocks have done so well over the last 4 years is because of the Democrats, because of their idiotic policies and regulations that the Federal Reserve had to keep rates low. They injected so much money into the system after those nonsense lockdowns, and by my estimate, there's still about $2.5 to $3 trillion extra above trend money that's still in the system from legacy COVID response. But I want to pose a question to you two, something that I've been for 24 hours. It's been in my brain. So yesterday we see what ostensibly was a pretty good jobs number. I still have problems with the way they calculate it, and as Nancy said, it disagrees with the household, and it's full-time jobs have gone down in the last year and a half. But here's this. If you look at small business optimism, and let's use that as a proxy for all business optimism, because it should be in this case. It's had the second biggest up move in the history of the index. The only other time was a bigger up move was in 2016 in November. I can't imagine what happened there. And this one happened at coincide with November 5th. So the question I'm going to ask is that when we see that job number yesterday, is it ridiculous to think that perhaps we're starting to see some good jobs numbers that's about a euphoric sense in the corporate sector, starting at small business, probably even medium as well? Do you think that sounds crazy when I say that, or no?
Trump effect, Nancy Tengler?
No, I mean, we just posted 3 new positions because we know that, we're going to have stability, regulation, which drives us crazy in the small business world is going to decline. So I think you're 100% right, Jim, 100%. People are loosening up and moving forward and being strategic instead of defensive.
Both John Carney and Joe Livornia earlier in the show called it a Trump effect. I think you see it more in the household survey that was up almost, how much? 500,000. Yes, 400, and because I think that self-employed people and LLC people, I think there's more of that than there is when you call HR departments for the big corporations. And 40% of the non-farm payrolls is still government-related. But down there in the household survey, that's almost 100% private sector. So I think it's quite possible. I mean,
let me finish the thought real quick, though, too, because I still say that what are the things that are going on right now, and you yelled at me for this 2 months ago, and I'm sticking with it anyway, is that the stock market is going to have a difficult time just based on how big of a transition this is. And again, if you want to see how big of a transition this is, all you have to look at that Small Business Optimism Survey. It looks like, something went wrong. It just shoots straight to the moon. But anyway, because that means higher rates then. And now the market has to step back and say, and I think the eventual conclusion is going to be, fine, stocks are good because, aggregate demand is going higher, the economy is going to be stronger. But there is a transition why we have to deal with 4.75 10-year where we were used to it for zeros. That's all.
Not a bad number. That's the point. That's a normal number.
But we got to get used to it, though, is all I'm saying.
Well, it's funny, though, for all the grousing, stocks have been doing fine. Bond rates have been rising. The Fed is a distraction. It's a negative distraction, I'll grant you that. And they say all the wrong things, and they're always wrong in their forecast. I think markets have figured that out. But fundamentally, look at, if you're going to increase aggregate supply, make the economy more productive by lower taxes and minimal regulations and more energy production, for example. And I'm going to throw in tariffs. I think there's going to be a 10% tariff. That's going to be a plus, not a minus. Going to raise $500 billion to support tax cuts and other things. I just think it's a great story. I hate to get too caught up in the short-term thing. We got to take a quick break here. Nancy Tengler, CEO of Laffer Tengler Investments, Jim Iuorio, TJM Institutional Services. I'm Kudlow. We'll be right back.
This is the Larry Kudlow Show.
This episode is brought to you by Amazon. Sometimes the most painful part of getting sick is the getting better part. Waiting on hold for an appointment, sitting in crowded waiting rooms, standing in line at the pharmacy, that's painful. Amazon One Medical and Amazon Pharmacy remove those painful parts of getting better with things like 24/7 virtual visits and prescriptions delivered to your door. Thanks to Amazon Pharmacy and Amazon One Medical, healthcare just got less painful.
What you're hearing is Hardie Fiber Cement Siding living up to its reputation as the siding that helps resist weather damage, no matter what Mother Nature throws its way. James Hardie knows how important a reputation is, especially when you're a home builder. That's why Hardie products withstand the elements better than wood-based siding, with styles to match their strength. Because when home builders work with us, we deliver our best so they can look their best. Protect your reputation with exterior products by James Hardie.
You know where your business would be without you. Imagine where it could go with more of you. Well, with Wix, you can create a website with more of your vision, your voice, your expertise. Wix gives you the freedom to truly own your brand and do it on your own. With full customization and advanced AI tools that help turn your ideas into reality. Scale up without being held back by cookie-cutter solutions and grow your business into your online brand. Because without you, your business is just business as usual. Take control. Go to Wix.com.
Now, back to the Larry Kudlow Show.
We're talking stocks with Nancy Tengler, CEO and CIO of Laffer Tengler Investments. Nancy's latest book, The Women's Guide to Successful Investing, and Jim Iuorio, Director of TJM Institutional Services. Jim, what's the direction for interest rates from here? How are you playing it?
I think that the yield curve, you remember the normal 2s to 10s is about 100 to 105 basis points. I think the 10-year is going to continue higher. I think it's going to go to 5%. Now, I also think at about 5.25%, it would begin to worry the Fed, and the whole quantitative tightening thing will go out the window. I'm not sure that there'll be quantitative easing, but I think rates are going to go higher. And as you said before, there's nothing wrong with having a 4.75 to 5% 10-year. It's quite normal. I will reiterate again that I think there is some transition problems that are occurring, and it's not going to be the smoothest thing in the world. But I think that's going to happen. So I'd rather be long yields than short them right now. But I do think there's a time where the Fed won't take it anymore.
Quick follow-up on commodities before we go back to Nancy. Jim Iuorio, commodities?
Yep, still like them. And ones I've switched a little bit now. Like I used to love gold, and if Kamala was going to win the presidency, I would have really loved gold. Now I just kind of like it. What I like more is swinging out to more in the industrials, particularly things like platinum and palladium, which were left behind because everyone was supposed to be driving an EV, and now hopefully we drop those. The government corporatism that's trying to push that, and internal combustion engines come back into a little bit too. So I like gold, but I like platinum, palladium, silver a lot more. Those are my favorite. And oil, by the way, too, because I think you said about supply side solutions, but that's 2026. We'll get a lot of that, the benefits of that. In the short term, I think aggregate demand from corporate tax cuts boost up things like energy.
Well, developing commodities, excavating all these things in Greenland is going to have a tremendous...
Yeah, when we take them over forcefully, send our boys there. That's what the left is saying. We're going to take over Canada, too, apparently.
I don't want Canada. It's too hard.
Neither do I.
Greenland, some lovely condominiums up there in the Arctic. Nancy Tengler, your stocks? Love stocks? Love them or hate them?
I do. I still think we're in the early years of a bull market.
Yep.
I do think Jim's right. I agree with Jim on interest rates, by the way. But again, using our 90s analogy, you can have robust stock returns coexist with higher interest rates. I think the market's lost confidence in the Fed, and that's what you saw, confidence in the Fed, and that's what you saw in the sell-off on Friday because the jobs numbers would indicate they can't cut anymore. Well, they've cut 100 basis points, and the 10-year's gone up 100 basis points, the 10-year yield. So the market's driving the train now, or driving the truck, however you want to say it. But I think you want to own stocks for the near and long term because AI is real. The spending is going to continue on the infrastructure. And when we sit on earnings calls, we're seeing, the use cases explode. That's why margins are going to improve. And we're even using it in our own work, software that, summarizes earnings calls for us and, allows us to be more in depth in our analysis more quickly. So I do think you want, you can't underestimate this economy. We're the best house on the block. And I think you want to be in the U.S. more than any other part of the world, at least for the near term.
That's a really interesting point. That the rest of the world looks so bad. Europe looks just awful. China looks awful. Japan looks awful. I guess, I don't know, Argentina looks better, but
UK, yeah.
UK looks awful.
Yeah.
I mean, you got to have a Trump effect on growth policies in all these countries, like Reagan in the 80s when he started slashing taxes. They did too. But right now, the rest of the world is a mess, an absolute mess.
Yeah, and I think
Europe is a museum, China's a prison, Japan is an old folks' home. Where are you going to send the money? Which, by the way, a lot smarter than me said that, and I stole it. But I can't remember who. It was probably Nancy.
Who said that? That's a great line. That's a fabulous line.
I loved it when I heard it.
It's an absolutely fabulous line. I mean, all the money in the world is going to come to the U.S. Fine. I'm all for it. It's just going to come here. Trump's going to waive regulations, let people invest. Geez.
And that's what happened last time. And we saw corporations repatriating, cash. So you saw corporate tax receipts double from when the TCJA was signed into law through last year. So there are going to be bumps. I think Jim's absolutely right, as there were in Trump's first term. Will probably be a lot of volatility, but the trend line will be positive, and I think it continues to be driven by technology. That's the lion's shares of earnings growth and margin improvement. So find great companies on sale when the hedge funds, go crazy and create the downward volatility.
The only place I'm just still stuck on that point, foreign play. Meloni, is that her name, from Italy, the prime minister of Italy? And Trump really liked her. They, broke bread together. And she's kind of a supply sider, I guess. But the rest of that place, Europe, wow. England, wow. What are they doing to themselves? They had
it completely crazy. And but it turns out, well, the rest of not even, they're taking over to the UK. If you regulate the heck out of everything and try to have this socialist utopia, guess what eventually happens? We know it. We could have told them. All they had to do was ask us.
I'm out of here. Terrific stuff. Nancy Tengler, thank you. Jim Iuorio, terrific stuff. All right, folks, we're going to do some money in politics in just a few moments.
Joe Montana here. In my football days, I knew the importance of a strong defense. Now I'm sharing how you can help defend your health against pneumococcal pneumonia and invasive pneumococcal disease. Are you 50 or older like me? The CDC now recommends vaccination against pneumococcal disease. Even if you're healthy, your age puts you at increased risk and over 6 times greater risk of hospitalization with pneumococcal pneumonia than adults under 50. Schedule your appointment today at vaxassist.com.
Sponsored by Pfizer.